Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're just wrapping up the 6th week of Bitcoin holding the 20-week moving average as support. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So I know it's not flashy, I know it's not, it's not necessarily entertaining, but for those that are interested in just the quantitative side of things and looking at the data, what it suggests, the 20-week moving average is critical in holding as support. We know in the past when we don't hold it, the price of Bitcoin tends to fall down to the 100-week moving average, the 200-week moving average, or wicks down to the 300-week moving average. So we know it's a critical regime to hold. And that doesn't change on a week-to-week basis, right? I mean, every single week that goes by, we know that this is the level to hold. And we've been talking about the 20-week for a very long time. And now you guys can start to understand, if you haven't before, if you're new to the market, what critical role it plays, okay? And during this move back down that Bitcoin had, so it had this weekly candle that dropped 20%. And where did it drop exactly to? Well, from the peak all the way down to the bottom, from the local peak, it was approximately a 20% drop. And this drop landed us identically at the 20-week moving average. It's not a coincidence. That's where the bulls will try to hold the line. If they don't hold the line, then it's usually the bad news bears in the short term. The bad news bears in the short term likely going down to the 100-week or the 200-week moving average. So the bulls, for now, have held the line at the 20-week moving average. You can see this is where it came down and was able to hold as support, and it's been slowly moving back up. Now, another key thing about this move back up is, as we mentioned a month and a half ago, this is also what needed to happen for the bull market to really get geared up. Why is that? Well, the 20-week moving average is continuing to go up. Okay, and for the price of Bitcoin to stay above the 20-week, the price of Bitcoin can't just move sideways at 10K, it has to continue to move up as well. And because of that, the key thing that Bitcoin needed to do to help kick off a multi-year bull market is, of course, to stay just ahead of the 20-week moving average. Now, one of the questions I get a lot, so I'll address it here, is, was that a successful test of the 20-week? Well, of course it was. It was 6 weeks. We came down to the 20-week. We held it as support many times, and now we've bounced up. However, I would still contend that we're not quite out of the woods yet. Even though we're above the 20-week, we still could be testing it again over the next several weeks. And I think it's going to take a little bit longer before we can really get too confident into the next bull market, okay? And there's a good chance that it has started. But the reason, again, is if you go back and look at the last cycle, let's go all the way back to 2016, 2015, that first move down to the 20-week, again, was approximately a 20% drop, exactly how it is now. And it held the 20-week moving average for about 4 months, okay? So, and we've showed this before. Once it came down, it held it for approximately 4 months. Now, if we draw that local top in there, one of the things you might not realize, right, without zooming in, and we've talked about this in other videos, is that despite the fact that on the macro scale, this looks like one consistent test of the 20-week moving average, which is the red line. The green line, by the way, is the 21-week EMA, and I'm just coloring the regime between them. So it looks like from the macro picture, this is just one continuous test of the 20-week. But we know if you zoom in, we went back to our local top. Okay, we went straight back to the local top, then back down to the 20-week, and then back to the local top, and then sideways into the 20-week, and then we broke out, okay? I know I've said this before, but the trend is still playing out so far. So, in the same manner that it did that, to the local top, to the local bottom corresponded to the 20-week, back to the local top, back to the 20-week, not the local bottom, and we got squeezed between that local top and the 20-week, and then we broke through. If it were to play out again, and again, I understand that it doesn't have to. I understand there's a good chance that something else entirely different happens. But if it were to play out, then again, we're looking at something like this. I mean, we came up to the local top, down to the local bottom, which corresponded to the 20-week. And then if we're going back to the local top, it would correlate today to 12K. Okay, so this is the local bottom. So it would correlate today to 12K. and thus 12K, a test of 12K, could be on the cards again in the short term, right? A test of 12K, there's still a good chance we don't break through it. One of the things we've talked about many times is the idea of these stepping stones. And we draw this primarily because we recognize that a lot of times it can be 2 steps forward and then 1 step back with what we thought was, this was the stepping stone originally, because we were moving sideways just between 11 and 12K, but we came back down to the 20-week moving average, which, as we've showed many times in the last market cycle, was our local bottom. Okay, so we have these 20% drops, 40% drops to the 20-week moving average. They were always scary times. In hindsight, they were probably the best times to be reaccumulating Bitcoin, because that was where the local bottom was. Okay, and over here, at least in the short term, it appears that has been the case as well. Every time we go down to the 20-week, it can be somewhat scary for people who are overexposed in the market. Maybe they recently bought a lot and now they're down. But at the same time, every test of the 20-week, at least locally, has been the best time to accumulate it. Okay, and so even if the price of Bitcoin comes back up to 12K, we still, on the macro scale, it still could look like a consistent test of the 20-week. So imagine the 20-week does something like this, and the price of Bitcoin comes back to the local top and then goes back to the 20-week, then back up and then sideways, and then it breaks through. This would all look like one major test at the 20-week if this were to occur. Okay, so while we can obviously say we've had 6 successful weeks of testing the 20-week moving average and holding it as support, the first test of the last market cycle took 4 months before we broke out to the next level. And by the way, I would consider the next level to be approximately 14K. Okay, and one of the reasons is if we look at the monthly chart and look at monthly candles, I think that 14K is going to be a pretty big regime. And the reason is just because if we take this move and we go all the way back over to where we were in the past, you can see that around sorry, that's not a straight line. Let me draw a straight line here. So if we just take you can see right here, this is right around 14K. So at 14K, this was the top of the monthly candles back in December and January that ultimately had us peaking at around $20,000. So I don't know how long we're going to be within this potential reaccumulation range here, but I would say that the next level that we would move up to and then move sideways out for a fairly extended period of time would probably be around $14,000. Okay, and so then the narrative shifts again, right? Or the sentiment, I should say, not the narrative, the sentiment shifts again. If we go up to 14K and then we go back down to 12K, then people become super bearish. Right now, if we go to 12K, people would be really happy. In say 6 months or something, if we're at 14K and then going back to 12K, then the sentiment would be completely different, because a lot of people would be looking at their what their portfolio was worth at 14K, and then they're now seeing it 12K, and they're upset about that. But this is, again, we recognize that it's likely a slower move up, a slower and more methodical move up back to the prior all-time high at 20K, and then it's going to take longer than just a few months to get there. Remember, it takes more and more capital to move up the curve. Okay, it's a lot easier to go from $1 to $10 in terms of let's say market cap. It's a lot easier to go from a $1 million market cap to a 10 million one than it would be to go from say 100 billion to 1 trillion. So there's a huge difference. There's a lot more volume that needs to come into the space, and this is why the contention has always been that this time will be a more slower and methodical move back up to the prior all-time high. Okay. And I think, as we wrap up this 6 week, this is great for Bitcoin. It gives us plenty of wiggle room for the short term. We can drop, the price of Bitcoin can drop approximately 10% and still be above the 20-week moving average. Now, with this renewed confidence, and I don't think that confidence has fully arrived yet, but if we were to move sideways at around 11.3, 11.4, 11.5 in that regime, if we move sideways, then expect a lot of other cryptocurrencies to start moving as well, because they're going to say, you know what, Bitcoin cooled off a little bit. We saw big corrections, but it looks like it might be heating back up. Maybe it's time for us to get a little bit more confidence. So we're talking about things like Ethereum, maybe even Chainlink, Cardano. There's going to be a lot of coins that might be doing quite well if Bitcoin can move sideways at this level. And we've already seen it to some degree. A lot of these coins have already started to rebound, but the point again is if it can continue to do this and move sideways, then expect, it would not be surprising at all to wake up one morning and see Ethereum up by 10%. Okay, this would not be surprising at all. On the other hand, if this is more or less just a fake out and we're actually going to go back down to test the 20-week, then we know that altcoins would likely bleed profusely against USD and against Bitcoin. And you might say, well, this is not fair, because why would it bleed against Bitcoin again when it already did that and it didn't go back up? It's just the way it works. Okay, it's just the way it works. If Bitcoin goes down, altcoins valuations against Bitcoin go down. If Bitcoin goes up too quickly, altcoin valuations against Bitcoin also go down. We know that for altcoins to do well, Bitcoin needs to go up, be above the 20-week moving average, healthy level, then start moving sideways or slightly up, and this is where other cryptocurrencies can shine. So because we've moved back up, and we haven't fallen back down yet. I mean, we're around 11.2 right now, so we're doing fairly okay. But if we start falling back to 11.1, back below 11K, then all bets are off for the short term on altcoins surging back up. Okay, all bets would be off on altcoins surging back up at that point. So look for Bitcoin to hold this level, and if it does, this is where I think confidence in other cryptocurrencies could come back. So I think that'll wrap it up for the video. If you guys like it, remember to subscribe to the channel, give the video a thumbs up. We also do have the premium list at intothecryptoverse.com, so check it out. You get access to a weekly report, a weekly video, a private Telegram alerts channel, a private Telegram chat room, and a risk dashboard, which is what I use to trade. So if you're interested in premium content, check out my website, intothecryptoverse.com. At the very least, subscribe to the channel, and I'll see you next time. Bye.